Let's talk about Bitcoin here, Ryan, because this morning, Bitcoin actually touched, let me get this right, a 10-month low. It's now down, Ryan, about 40% here off that record high of about 126,000 in October. What is going on here? Help us make sense of this, Ryan. What are the pressures on Bitcoin?
Look, Josh, there's a lot of pressure on Bitcoin at the moment. As you mentioned, we're down more than 40% from the prior all-time high above 125,000. And so there is pressure on Bitcoin right now. I think part of that pressure is coming from gold taking the spotlight and other commodities taking the spotlight. And I think the other element of this is that we are just in the midst of a Bitcoin bear market. We've actually been in a bear market now for many months, probably more closer to a year. And so I think that's what's keeping Bitcoin down. We've now seen it kind of drawing down the most over that period overall. But nonetheless, it's a bear market. It's a bit dark right now in the crypto space, but we think there's brighter times ahead.
What are those brighter times ahead, Ryan? Walk me through. What are some catalysts 6 to 12 months out that you have on your radar?
There's a few major catalysts for Bitcoin that we see over the next year. First, emerging from this bear market is critical. Sentiment right now is at an all-time low, particularly amongst retail investors, which of course historically have driven the Bitcoin and crypto market more broadly higher. So while that sentiment reverses as we emerge from this bear market, that will be important. But I think more important than retail investors this time around for Bitcoin is institutional adoption. That's a major catalyst that's multi-years and long-term oriented. And we're seeing that happen at Bitwise in the conversations we're having with institutional investors every single day. Major wirehouses, RIAs and family offices and the like are all starting to come around to Bitcoin. They're asking serious questions about making Bitcoin and crypto allocations. And that's a very long-term oriented catalyst.
So Ryan, with Bitcoin here around 78, do you all at Bitwise, you do targets, Ryan, like a year-end target for Bitcoin?
Yeah, our view this year going into 2026, when Bitcoin was trading around 93,000, when we published our report about 2026, was that Bitcoin would hit new all-time highs this year, and it would break what a lot of market observers have deemed this 4-year cycle that has historically plagued crypto. So we believe Bitcoin will be higher. Our long-term view for Bitcoin is more decades out than years out, and we believe Bitcoin will hit 1 million over the next decade, driven by institutional adoption that I just spoke about.
There's another sort of storyline out there, Ryan. I'm curious to get your take on this, which is, well, what about Trump nominating Kevin Warsh, right? Trump has said, okay, Warsh, that's my guy. That's who I want leading the Fed. Warsh, historically, Ryan, you know this, you would think of him as more hawkish, right? Concerned about inflation. And do you think maybe that's playing a role here? In other words, some folks thinking, okay, well, hold on. If it's Warsh, maybe not such loose monetary policy ahead. What could that mean for Bitcoin?
Yeah, Josh, it's a really good point. Warsh is a pro-Bitcoin person. It's important to note. He understands Bitcoin and is supportive of Bitcoin, believes it has a place in portfolios and that it's breakthrough technology and important to the world. I think that's really important. But you have that against the backdrop of him being seen as more hawkish and not, being for the growth of the money supply, which historically has been supportive of Bitcoin. So you have these two different sides tug of warring at each other when it comes to how it will impact Bitcoin. I think net, we will see interest rate cuts. The market's pricing in about 50 basis points of cuts over the remainder of this year. I think we will see that. Not to say Warsh isn't hawkish, but I think he'll be a bit more dovish than most people are expecting.
What about ETF flows, Ryan? I'm curious, just broadly for spot Bitcoin ETFs. You have line of sight there?
Yeah, so ETF flows for Bitcoin ETFs have been remarkable when you zoom out. They've been the most successful ETF launches of all time in the tens of billions of flows in their first year and in their second year. But that has come down a bit over the past few months. As I mentioned, we believe we're in a bear market currently. And what that's led to are things like the basis trade, which is very popular around Bitcoin ETFs run by hedge funds. That has collapsed a bit. We've seen outflows from the ETFs because of that. As I mentioned, we've seen attention flow to other asset classes like commodities, like tech stocks. And so ETF flows have slowed. Corporate purchases, on the other hand, of Bitcoin are starting to reaccelerate. We've seen MicroStrategy buy tens of thousands worth of Bitcoin already this year. And we think that ETF flows will turn a corner as we have major wirehouses and other institutional investors onboarding Bitcoin ETFs to their platforms. Morgan Stanley, UBS, Merrill Lynch, Vanguard, all of these asset managers have approved Bitcoin in recent months for their wealth managers and their clients to invest in. I think that's a huge catalyst going forward, but it takes time. Not all of those wealth managers allocate right away. Some take months, some take quarters, some take years, but net, when you zoom out, that's a lot of demand for Bitcoin over the next decade.
I want to come back around, Ryan, to a point you made earlier. How much of Bitcoin's slide, Ryan, do you think we chalk up to excitement in gold, in silver, in the precious metals? In other words, how much do you think investors said, well, hey, that looks like a fun party going on over there. I don't want to miss out on that. I'm going to move there and not Bitcoin.
Look, as a Bitcoin guy, it's hard not to see what's happening in the gold market and think that's a fun party. I don't want to miss out on it. I think the gold trade has started as a push by central banks to increase their gold allocations in a world where having self-custody of assets, being able to move away from reliance on other governments and other central banks is important. And so we've seen central banks increase their purchases of gold starting really in 2022 and 2023, and it's been accelerating. I think now gold's turned into more of a momentum trade. We've seen the runaway price of gold and silver and other assets. So I do think that plays a bit of a role here when it comes to what's happening in the gold market. But the fundamental thesis for gold is that it's a way to store value outside of any government or bank and to custody your own assets in a world where you're worried about fiat debasement and you're worried about spiraling debt and irresponsible monetary and fiscal policy. And those same topics are things that we've been speaking about when it comes to Bitcoin for now over a decade. And I think that those themes are going to eventually land investors on the point that Bitcoin is a digital store of value, much like gold is a physical store of value. So I think the same themes drive Bitcoin higher over the next decade as have driven gold, but gold's in the spotlight right now.
Ryan, as always, great to have you on the show. Thank you.
Thanks, Josh.